On this video, we're going to talk all about closing costs when buying a house, and we're getting started right now. Hey, what's going on? I'm Emmett Dempsey, mortgage broker and owner of Treasure Coast Mortgage here in Port St. Lucie, and welcome to another video. On this channel, we talk more about mortgages, the home buying process, and some cool things around Port St. Lucie and the Treasure Coast. So if you're new here, please think about subscribing. Okay, closing costs when buying a house. Now, if you're buying a house, you probably saved for a long time for a down payment. You scraped together a few $1,000s or whatever it may be, or you've talked to your mom and dad and given you a gift, and all of a sudden you say, wait a minute, there's closing costs? I mean, what's all this going on? Yeah, there are closing costs when buying a house, and I'm going to go into detail further on the video, so stay tuned for that. On a $200,000, $250,000, and a $300,000 purchase price, you can see exactly in dollars and cents what it'd be. But I'm going to give you a overview about what closing costs are. Now, there's certain terminology that there's kind of some confusion. You know, for me as a lender, my buyers want to know, how much money do I need? Total money. And that's when my realtors and their buyer's agents say, hey, how much money do they need to close on this house? That's a term that I call cash to close. Okay, so that's something you need to figure out. What's my cash to close? If I see this house, how much money do I need to close on it? Okay, now closing costs are one piece of that. So a cash to close consists of your down payment, your closing cost, and your prepaids. Now, your down payment you're probably very familiar with. So on a VA loan, it's 0. On a FHA loan, it's about 3.5%. Conventional can be at least as low as 3%. And basic definition is that's the difference between the purchase price and your loan amount. That's really what your down payment is. So whether you put down 3%, 20%, that gap is what your down payment is, okay? So that's pretty self-explanatory. Now, your closing cost, consist of, lender items like origination, processing, underwriting, things like that. Also, your title charges and taxes. Now, Florida is great, has no state income tax. However, every real estate transaction has what they call doc stamps or taxes that go to the state and local governments. So there's that. Now, also depending if you have an escrow account like most of my borrowers do, you have to collect escrows. You have to collect your first year of homeowner's insurance or flood insurance if you're in a flood zone, plus a certain portion of insurance and taxes to pay the next year. So those are what we call prepaids or escrows or impounds. They're called, those are the different synonyms for those. So also in your prepaid items is what's called per diem interest, depending on what day of the month that you close. So if you close towards the beginning of the month, you have more per diem interest, from the day you close until the end of the month when it calculates. So basically your per diem interest, your escrow impounds, and then your first year of hazard insurance will do your prepaid items. So let's go ahead and take a deep look into different purchase prices and what closing costs are for you. Here we go. Okay, and this is the system that I use to present options to my clients. It's called Mortgage Coach, and this is called a total cost analysis. It gives you the detailed cost of every loan option over a short time period and a long time period. Generally, 5 years is your short time frame, and 15 years for long term. So you can see here, there's 3 different options. This is a conventional loan at $200,000 purchase price, $250,000 and $300,000, just so you can compare them side by side. Okay, so you can see what the interest rates are today. This is a 30-year fixed. Okay, with no points. So basically, the payment, we go into more info here. This assumes $150 for insurance, $250 for taxes. Of course, every property is different. Based on whatever home you're making an offer on, you need to really verify those numbers because it can swing your cash to close pretty heavily, as I'll show you in a minute. Okay, so when you go here into the closing cost tab, you can see here your down payment. As I mentioned, that's the difference between your purchase price and your loan amount. Okay, so on a $200,000 purchase price, this is 5% down. That's a $10,000 down payment. Now the APR cost and non-APR cost, there's another video on my channel about APR, but basically there's different closing costs. Now you can see here what the prepaid items are. $32.50. They have here now contributions. That's going to be whatever the seller pays. Generally, they pay the owner's title policy and the doc stamps on the deed, and I kind of showed that here. But that's basically what it is. Here's your down payment, here's your closing cost, and here's your prepaids. That's how it breaks down. So let's go ahead and dig into this even further. Okay. Generally on most of my loans, when a lender paid, all I have is a processing fee. So sometimes there might be some points depending on FICO score or your personal choice, or choose to have an underwriting fee from the lender that I choose. Usually I'll build that underwriting fee into your rate. The credit report, flood cert, those are all high estimates. Usually that credit report ends up being half of that. Settlement fee is from title. Your lender's title policy will generally be $25 if you get the owners, which usually the seller pays for, as you can see, paid by seller. Okay. Your Florida Form 9 is a title form, your endorsements, and the recording fees to the local county to record your mortgage, your intangible tax and doc stamps. That's what I talked about earlier about taxes to the government that are required per every single mortgage that you do. And then same thing for the seller upon transfer of the deed, the seller pays that to the county. So there's also a survey fee. Also not shown on here is what's called as you know is an appraisal. That generally runs you between $300 and $500. Depending on what kind of loan that you get, but that's usually paid outside of closing. That's why it's not depicted here. And then some real estate agents will charge you a transaction fee. It depends on the real estate agent that you choose for their cost. Now, here's your reserves or your impounds, part of your prepaid items. Okay, so your hazard insurance premium, because you had to pay 12 months of insurance up front, plus withhold 3 for the next year. So every payment you make puts 1 month in. So when your comes up and due again, it'll pay out. And that's why you have an escrow account, so you don't have to worry about it. Okay. Now, but you can generally see here, one thing that kind of strikes me is that the $100,000 difference in cost of a house, what's that, between 17 and 22, so it's like, 22 minus 17. It's only about $5,000 different cash to close. That's just the power of financing. And so when you're putting down 5%, just the loan amount gets bigger, so you're able to finance more. So it really doesn't swing your cash to close a lot, as you go up in purchase price. And that's why I like to give my clients options so you can see things side by side. That's how that works there. So I hope that's an informative deep dive. And of course, you want to get your own personalized TCA for whenever the home that you're making an offer on. Okay. Informative deep dive into different purchase prices, what cash to close is on different purchase prices, so you can see, good rule of thumb I tell clients is 3% is a good ballpark closing cost on top of what your down payment is going to be. Of course, if you have any discount points or anything like that, it's going to add to it, but 3% will get you into the neighborhood. So just wanted to thank you so much for watching, and I'll see you guys on the next one.